Today everyone, we from Group 6. We would like to present our group assignments. The title is The Effect of Infractions in the Children's Product Category toward Malaysia from 2010 to 2019.
Assalamualaikum and hi. My name is Siti FATIMAH binti OTHMAN and my metric number is 279922. First, I will explain the definition of inflation. In economics, inflation refers to a general progressive increase in the price of goods and services in an economy. When the general price level rises, each unit of currency buys fewer goods and services. Consequently, inflation corresponds to a reduction in the purchasing power of money. In economy, there are a few types of price index such as consumer price index, producer price index, wholesale price index, and employment price index. However, in measuring inflation rate, we are using consumer price index by subtracting past date CPI from current date CPI, and the answer will be divided by past date CPI and then multiply the result with 100. It is important to have an accurate measure of inflation, since inflation is a sustained rise of the general price level. Inflation statistics form the basis of government policy, affect firms and individual planning, and also used to lead wages, welfare benefits, and interest rates. Inflation occurs due to a few causes such as demand pull, cost push, and built-in. Demand pull refers to a situation where aggregate demands exceed aggregate supplies. In this situation, firm or producer tend to increase the price of goods and services. Second, cost push refers a situation where the production costs such as raw material and labors increase. This resulted in higher price of goods and services even the demand remain constant. Third, built-in inflation will happen when workers expecting their wages to increase, since the price of goods and services rise up in order to make sure their living costs stable. Higher demand paid from workers will increase the production cost, and firms tend to increase the price of goods and services.
Assalamualaikum and hi everyone. So now I'm going to talk about literature review. The first one, according to Amedio 2012, he already stated in his research about inflation occurs when the prices of most goods and services continue to rise. When this happens, the standard of living plummets because each dollar buys less, we must spend more to obtain the same amount of goods and services. Next, according to Cheng and Tan 2002, inflation causes economic problems and distortions in the functioning economy, which may result in a country's economic growth rate ceasing. Inflation is likely to occur when major economic variables such as at the fiscal deficit and the excess money supplies change. As stated from Ming Yu Chang and Hui Bun Tan in 2002 in their research on how they discuss about on how the trend of inflation rate in Malaysia and figure out what is the significant factor of inflation in Malaysia. Maintaining a low and stable inflation rate has become one of the challenges in most countries and macroeconomic management. Malaysia, for example, has a very unique inflation experience. They discuss about the economy has experienced high in 1973 until 1981 and low in 1981 until 1987 inflation regimes and was able to maintain a low and stable inflation during the high economic growth period of 1988 until 1996. Moreover, according to Sixtus in 2010, gross domestic product GDP is a fundamental determinant of a country's economic performance, and they also found that the GDP falls relative to the consumer price index CPI. In conclusion, the CPI and the GDP deflator were used to measure inflation itself. According to Barrow 1995, he conducted an empirical study on the relationship between inflation and economic performance over a 30-year period using a large sample of countries. This paper examined the effects of inflation on economic performance using data from over 100 countries from 1960 to 1990. In this study, annual inflation was calculated using the CPI itself. According to the study, a country's human capital grows faster if it grows at a faster rate. The study employs instrumental variable to assess the relationship between inflation and growth. Last but not least, according to Diana Viljuan and Andrea Millet in 2014, they have discussed in the study, which is they focus on the inflation scenario in South Africa. A new inflation index is proposed for South Africa in order to mitigate the negative impact of capital volatility on the South African economy. The new index, which excludes all exogenous factors, will allow the National Treasury to set a much lower inflation target for the monetary authority to manage. South Africa's interest rate differential will narrow significantly in comparison to developed countries. The reduced interest spectrum will also bring other benefits, such as stimulating real growth, increasing employment opportunities, and as well as contributing to poverty reduction. Thank you.
Hi and good evening to all. My name is Muhammad NAJHAN. My metric number is 277328. This is the line graph for the trend of Malaysia's inflation rate from 2010 to 2019. As you can see, the inflation rate for 2010 was 1.7%, 2011 was 3.2%, 2012 1.6%, 2013 2.1%. The next year was 3.2%, 2015 and 2016 was 2.1%, 2017 was 3.7%, 2018 1%, and 2019 was 0.7%. From 2010, Malaysia inflation rate was at 1.7% and increased to 3.2% at 2011. This happened because Malaysia's consumer price index, Malaysia CPI, increased by 3% by the first half of 2011. In 2012, Malaysian inflation rate has fallen to 1.6%. It is found that Malaysia inflation has fallen dramatically in the first half of 2012 from 2.7% in January to 1.6% in June, before it stabilized at 1.3% in the second half of the year. Overall, inflation in 2012 was lower than the forecast range, which at 2.5% to 3%. Consumption growth in 2013 was 7.7%. Low unemployment rate and higher demand for labours has also led to the higher wage. So this increased the buying power and higher demand in market. Major factor that led the increase in 2013 CPI were food and non-alcoholic beverage that increased by 3.6%. Malaysia inflation rate decreased to 2.1% at 2015 from 3.2% at 2014. Inflation rate in 2016 remained the same, which is at 2.1%. In 2017, increase in exchange rate in ringgit over the past year reached the peak at 4.5002 against US dollar. This will result in demand pull inflation. Malaysia CPI expected to rise between 3 to 4% in 2017. After the new government zero rate good and service tax (GST) was used, Malaysia inflation rate has major decrease in 2018 at 1% from the last year, which is at 3.7%. This inflation dropped below 1% in June 2018 for the first time in nearly a decade.
Good day everyone, my name is NAJHAN, metric number is 270494. And I will present for the part the effect of infractions in the children product category toward Malaysia's from 2010 to 2019. In 2011, it's found that the inflation rate for category transport has increased almost double from previous years. This caused production costs to increase as the transport costs increase and lead to the cost push infractions on other product category. Well, in 2012, the inflation rate decreased in all four product category. It's found that the low inflation rate of product category for housing, water, electricity, gas, and other fuels has lowered the transport fare. And the logistic costs also have reduced, whereby this will reduce the production cost. So now firms have extra fund to increase the output. Lower fuel price also will help reduce the living costs, increase the income disposables and purchasing power. As a result, will increase the aggregate output and Malaysia GDP. Well, in 2013, the inflation rate for food and beverage has increased and has recorded the second highest. This has affected the food good consumptions of households, especially for fruit good that is highly elastic to the price, such as meat, fish, and dairy. The increase of fruit and beverage price also has increased the living cost of the households and caused fewer people to saving. Well, in 2014, the fruit and beverage has accounted for the lower inflation rate. Inflation rate for all product category has decreased, except for the fruit and beverage. As majority Malaysian has spent a large portions of their income on fruit consumption, so when the fruit price has fallen, it will cause the living cost of households to reduce and increase the food consumption. This has led to the increase of Malaysia aggregate, which will urge the output growth and cause the Malaysia GDP to increase. Well, in 2015 to 2016, the inflation rate for the product category of transport has fallen to negative. This is due to the reduce of fuels cost and it has recorded the lower inflation rate for those years. The defractions of the transport has caused the transport and logistic cost to reduce, thereby reduce the operating cost. So when the operating cost reduce, it will encourage the firm to expand the production's activity and cause the aggregate output and the GDP to increase. However, in 2017, the category for transport has recorded the higher inflation rate. There is a sharp rising for the transport inflections has caused the travel cost to increase. This is because transport cost is the major contribution to the travel cost. And the higher transport cost will have a negative impact on the traveler decision choice. As a result, the increase in transport costs will result in decrease in tourism flow. So, it will reduce the domestic and international travel activity, and this will cause the number of travelers arrive in Malaysia to decrease in 2017. In 2018 and 2019, the inflation rate of product category housing, water, electricity, gas, and other fuels has reduced. This is due to the low fuel price, which this also has caused the transport and production costs to reduce, thereby reducing the price of goods and service. As the price of goods and service has goes down, it will reduce the living cost of household, and it also will increase the purchasing powers and the demand for goods. The high demand along with the lower cost of productions will then encourage the firm to increase their productions, and this will cause Malaysia aggregate output and GDP to increase. Moreover, the expansion of productions also will lead to increase in job opportunity. So this will help Malaysia to reduce the unemployment rate.
Good day everyone. My name is KALAIVANI NALLATHAMBI. My metric number is 278239. I want to present about measurements taken by the government in controlling inflation. Fiscal policy, monetary policy, price control, and rational wage policy are a few examples. The first measurements taken by government in controlling the inflation is fiscal policy. By fiscal policy, government should reduce unnecessary expenses. This will also limit corporate spending on goods and services dependent on government demand. However, reducing government expenditure is not a simple task. It becomes difficult to discriminate between significant and unimportant expenditure. As a result, taxes should be added to this step. Next, increase the taxation. The effectiveness of the tax varies, classified according to the types of tax paid, but certain tax increases will lower economic expenditure. A tax rise combined with cuts to public spending could have a two-pronged effect just on the market's money supply and output. Another theory obtained by Keynes is idea of mandatory savings or deferred payments. To accomplish this, the government should implement high interest rates, appealing saving strategies, and savings or retirement funds. These methods effectively limit inflation by directing people's earnings into savings accounts for an extremely long time. Second measurement taken by government in controlling the inflation is monetary policy. First, open market operations. The Federal Reserve reduced the money supply by selling large bonds to the general population, specifically security traders. Customers pay for securities by making payments against commercial bank deposits, which are lawful reserves for financial institutions. In exchange for the sale of securities, banks are required to limit their loans and security acquisitions. Secondly, raise the reserve requirements. Low reserve requirements ensure that banks get more money available, boosting the economy. If there is excessive wage growth in the economy, the Federal Reserve increases the reserve requirement, which slows, if not stops, money growth. Thirdly, the rediscount rate. The rediscount rate influences how much it costs banks to increase reserve requirements. When inflation is high, the central bank boosts the rediscount rate, making banks' purchase of reserves more expensive. Another method of controlling inflation is to prohibit future increases in product and service pricing. In this strategy, inflation is controlled through price controls, but it cannot be managed in the long run. In such cases, the underlying inflationary pressure in the economy does not reveal itself in the form of a price increase for a short period of time. Another critical strategy is to implement a reasonable wage and employment policy. The federal government must, among other things, impose a wage, income, profit, dividend, and bonus freeze. Thank you.
In conclusion, government has implemented policy to control inflation. First, monetary policy has been implemented by cut the money supply and raise interest rate. This situation will decrease the price of bond and people tend to save their money rather than spend it in this situation. Government also has been implementing fiscal policy by increasing tax. When disposable income has increased, the demand for goods and services will decline as well. Producers tend to decrease the price of goods and services since demand has been declined. Government also can cut their spending to control inflation. In controlling inflation, we recommend government to create more interesting investment package. This will attract people to invest more and decrease the demand for goods and services in the market. Lastly, we also recommend government to obligate life insurance for all government servants. This is not only bring benefits for their future, but also can control the demand for goods and services in the market.